Okay, this video is just to make you aware of a major accounting standards change that occurred in 2019 and had to do with leases. And this was probably the most significant accounting standards change that we had in recent history. And so I'm just going to go through the details of what changed. And in this class, we're primarily just dealing with the post-change accounting treatment. But I want you to know what companies that have leases dealt with just a few years ago. And so here is just a breakdown of the change. Before 2019, leases were accounted for. There were two different classifications, just like there were after 2019. But first thing to tell you is that these classifications had different names. Okay, operating leases, they were called operating leases before too. But what we now call finance leases were previously just called capital leases. And don't ask me why they decided to change the name. But they did. Okay, so they changed the name from capital to finance. Okay, and what I want to say just as a general statement is that it used to make a big difference what type of classification you were in. So I'll put an exclamation point between these two classifications. It used to make a big difference for accounting what type of classification you were in. And the major reason was for operating leases, we used to not report any assets or liabilities on our balance sheet. So imagine you lease an apartment. Well, when you're leasing an apartment, you don't really think of that apartment as your asset, do you? I mean, you're just leasing it for a few years or something, and you don't really consider that to be your asset. And likewise, you don't really consider the payments that you have to make on that lease to be like debt, do you? You just make the payments and you consider it an expense of living. Okay, so pre-2019 accounting for leases for businesses went with that intuition, okay? In an operating lease classification, you don't put the asset on your balance sheet and you don't put the liability on your balance sheet. For what was previously called a capital lease, you have put the asset and liability on your balance sheet, okay? And in terms of, okay, so now we've talked about the balance sheet treatment where now operating lease assets and liabilities are put on the balance sheet. And as you can see, the accounting treatment between finance and operating leases is nothing, really. There's not really much of a difference between accounting treatment of finance and operating leases, where there was a big difference between capital and operating leases prior to 2019. But in terms of expenses, right, there's no real change to the income statement. And in terms of cash flow, there hasn't been a real change to the statement of cash flows. So the big change was right there on the balance sheet. And let me just point out something funny before I move on to the next slide, which is you'll see that they changed the name from capital to finance, but where the accounting actually changed was in operating leases. So I consider that a bit confusing, right? So you change the accounting for operating leases, but you change the name for capital leases. And I consider that a little strange. So the next slide is just the criteria, what they used to be and what they are now. And you can pause this if you're interested. I'm not going to go through these criteria. These were the criteria. So pre-2019 here and post-2019 here. These criteria, companies would take their lease, okay, they would read it, and then they would go through these criteria to determine whether they had a capital lease on their hand, if they say yes to any of these questions. Or if they say no to all the questions, then the company has a operating lease on their hand, okay? So they went through these criteria to determine what type of lease there was. And it made a big difference prior to 2019, but now, after 2019, it's not that big of a deal because it doesn't make that much of a difference what type of a lease you have, whether it be finance or operating. Okay, now I'm just going to show you a few examples of what happened in 2019. So first we'll look at McDonald's. So McDonald's leases a lot of the assets that they have in their business. Primarily, I think the land underneath the McDonald's restaurant is leased. But don't quote me on that, right? Go read their financial statements to learn a little bit more about what they lease. And you can see, so first of all, let me just tell you that all of their finance leases were already capitalized, okay? They were already capitalized probably within their property and equipment balances. Their finance leases, which were previously called their capital leases, were already capitalized. So you see there's not really much of a change between 2018 and 2019. In their PP&E balance, they have approximately the same number of restaurants, and for those that were leased, they had already capitalized them. But for all of their assets under operating leases, that didn't used to be on the balance sheet, as you see here, and now it is, okay? So this is all of their operating lease assets. And this balance sheet is in millions. So when you look at 12,522, that's actually $12,522,000,000 worth of right of use assets that just overnight, right, appeared on McDonald's balance sheet. So if you weren't a sophisticated reader of their financial statements, you might not have known that those assets existed, or by the way, we're going to get to the liabilities existed. But now in 2019, it's not that they are leasing more assets than they used to, right? It's just that those assets now appear on the balance sheet. And likewise for liabilities, okay? So the finance lease liability was probably always present. Where was it probably always present? Probably in this long-term debt balance. That's where the finance leases were always there, okay? So there wasn't that much of a change from last year to this year. But for operating leases, look at this huge change from 2018 to 2019. That's the current. And here is the non-current, okay? Long-term lease liability went from 0 to 11.8 billion. And you can see if you add these two numbers up, it's roughly equal to the asset value that they added on this side of the balance sheet, okay? 11,895 plus 743 is approximately 12,522. So they basically just debited a big asset account and credited a big liability account. Again, are those new obligations for McDonald's? No, they always existed. It's just that now we see them on the balance sheet, whereas we had to go to the footnotes to learn about them prior to 2019. And finally, I'll just go through the Crocs example. Crocs also had a major increase in their balance sheet. Here's their right of use assets, and these are their operating leases. And this balance sheet, you can see how much it changes from 2018 to 2019. And this is from a 10Q, by the way. You can see that this is June 30th, 2019, where the comparative period is just 6 months before it. And then similar to the assets growing, the liabilities also really showed up on the balance sheet. And you can see if you add these two numbers together, you can see it's approximately equal to the amount of assets that was added. And that was just added as a liability. Again, did Crocs gain a new liability? No, they're just showing it on their balance sheet rather than having it present in their footnote. So just to review, what were the main points of the lease accounting standard change? Capital leases are now called finance leases. Okay, that was one. Operating leases used to not be capitalized, but now they are capitalized, and there's assets and offsetting liabilities on the balance sheets of companies that have operating leases. But point 3 here is the income statement and statement of cash flow treatment is generally unchanged from how it was before 2019. So the big change here was in the balance sheet.